Hey guys, welcome back to this quick video where I've promised on Sunday in my video that I've made or put out with the red folder news, how to trade it, that red hot, the hottest strategy out there. And I even said in the video that there's nothing for you to do in the market on Monday, Tuesday, and only come back to the market on Wednesday and Thursday because there was CPI red folder news on Wednesday. Don't know what the news will react tomorrow, but this is the strategy and I'm going to take you through it quickly. As you can see, it's a live market, and I've recorded my whole entry and the whole process, which I will obviously play out at the end of the video at faster speed so you can have a look at it. But let me just take you through it. So first of all, the rule is for the strategy is you wait for red folder news, and today it happened at 8:30 CPI, and you wait for a candle to create a violent move, leaving wicks on both sides of that violent move. Reason for that is those moves are there to trap people on the buy side and the sell side, and therefore there are lots of liquidity that's still resting there. Stop losses for people that went short here and stop losses for people that went long here. So what you need to do the next is you want to wait for the market to obviously run one of those liquidities first, and then look for a opportunity to go to the other side. And that's just the basis on that is just the market seeks to take liquidity on both sides of this liquidity run or this big news event. So in this case, just to take you guys through it, it went obviously up and down. So obviously people thought we were going short, and then the next candle comes and it was green, obviously black at one stage, and then it trapped everybody. So everybody was just stuck there. And at this point in time, I was looking to see if we want to run this target first and then create some sort of buy opportunity to go higher, or vice versa. The reason I like the buy side first, or this upper target first, is my bias on the bigger time frame is bearish. So this played out perfectly for me. There was opportunity in this fair value gap that got inverted here, but this line is equilibrium of this range. Anything below this line is discount, and anything above this line is premium. You never buy a market in a premium at a premium, and you never sell a market or sell anything in life at a discount. You buy at a discount and you sell at a premium. Simple as that. So I wanted to see if price will dip into this fair value gap. That would give me a little bit of a discount. I would have bought there to take it up to there, up to that target, that liquidity, but never gave me the opportunity. And I even left a message in here saying sometimes a lot of annotations been taken off, but go through the video and you'll see I've marked out the discount and premium areas, and I even said sometimes the market goes without you. But the objective for us on this strategy is you wait for the market to run one of the liquidities first. In this case, it went up there and it came back. You don't sell there. There was no opportunity. There was nothing here. I mean, if it inverted this little gap here, of course then. But just sat through it, and it made a high, low, and it created another liquidity and consolidate push. And then you see this big drop, this big black candles. That's your shift. That pullback up into that, inverted fair value gap and the fair value gap overlapping. That was the perfect entry. I mean, that is what you need to do. I've missed this entry because I stepped away for that minute. I came back, I saw this, and it already pulled away from that area. So I left it and I waited for a next push. And obviously this liquidity, that's your shift in structure to go lower. And you can see here's my entries. So I waited for another push down. I'm still above this blue line. This is my opening gap. And anything above that is something I would like to sell. And obviously above this liquidity. It pushes lower and it pulled back. I short one there. It went even lower. And then I put an order in to catch me in this fair value gap. And sure enough, it went in there. And then it took its time, but eventually it worked its way down, create new fair value gaps. At some point, I've moved and if you look at my video, at equilibrium, I scaled half of my position. I took two sells, one share each, and I took one of them off the table here, and then I've taken another off the table of this equal lows here, and then it dropped through it. So it worked out perfectly fine for me. I've marked out some liquidity here, because it's forming lower highs, lower highs, lower highs, lower highs at some point. And as you can see, we drop right through our target, and there's this big gap here. If this comes and closes this gap, there's a good opportunity we're gonna probably run this, but that's not part of the strategy. That's just me telling what I think is might happen later in the PM session. So It's as simple as this, ladies and gentlemen. You mark out the highs and the lows after wicks. If there was only one wick and it went up, I would have targeted this little wick down here, but there was a little wick, another wick, which I thought we were going to get to at the end. And all you got to do is wait for big news events. You don't have to trade every day. And in this trade, I took two separate trades. And if seeking to get funded and all of that, I know 50K account, you need to make like $3,000. In this trade, I took half of it off there and the other half down here. I took easily $3,500 on this trade, and you could have made even more if you've left both your positions on from here. That was over $5,000, and so it works out at the end of the day. And I think the key thing for trading a strategy is, I told you on Sunday, what am I looking for on Wednesday. Wednesday presented exactly what we were looking for, and all you got to do is, what you got to refine for you as a person, as a trader, is what is your entry model. If you've got your entry model, my entry model is fair value gap, inverted fair value gaps. Like I said, if you were a Fibonacci trader, you would take the high from here down there. That would have been a perfect 60% retracement or whatever, and this push down here gave the same thing. So you could have entered 1, 2, 3 entries above this red line to take you all the way down there, and you could easily have cleared any funded accounts you had open. If you were copy 1 million of them, it would have done the same. So sit back, relax, and have a look at how this trade plays out, which I'm going to play for you now. And drop some comments in the section below, like and share, subscribe to this channel. I'm going to do more of this. And tomorrow there's some more news tomorrow. I'll dial in to see if there's an opportunity like this. If there's not, we've made money today. There's no reason to rush into trades. So sit back and enjoy the rest of my video. And I'll see if I can make another video tomorrow. Obviously provided the market presents something similar to this, but let's see. Take care and see you guys. Bye bye.